Good afternoon. This is Brian Splitt with Allendale here on July 23rd with your closing commentary for the week. We did have a poor close today for the corn. September contract finished 5 1/4 lower at 371 1/4. That's actually down 23.5 cents on the week. And we got off to a poor start Sunday night when the weather models had the heat out of the forecast. December corn finished 5 3/4 cents lower at 384 1/2. And that was down 22 3/4 cents on the week. As far as the soybeans, August beans were up a penny today at 10.17. That is still 2.5 lower on the week. The Novi beans were up 2 today at settlement at 981 1/2, and that is down 3.5 on the week. The only grain contract that was able to finish positive for the week was the wheat. September Chicago wheat was down just a quarter penny today at 5.96 1/4. That's up 9 cents on the week. December Chicago wheat down a quarter as well at 6.27 1/4, also up 9 on the week. As far as the corn market goes, really today we probably saw a little bit of follow-through selling after yesterday's poor close. There was a lot of excitement to buy early in the session yesterday with wheat opening nearly 20 higher. But just a couple things to keep in mind here. Last week's high for December corn of 410 is at 62% retracement of the 450 highs that we had in January to the 343 lows that we posted ahead of the acreage report. So, not saying that that is a top here, but that is typically 62% is a very key retracement level that provides very stiff resistance. So, without any additional weather scares, that's a very important area to watch. As far as the close today, we did close below last week's low of 386. You're going to have talk of a potential head and shoulder top on the corn chart, which if we're talking basis to December futures, that'll have a target of 362. As far as soybeans, we did have an announcement this morning of 175,000 ton purchase of soybeans by China and another 175,000 ton purchase to an unknown destination. So that did provide support for the market throughout the session. And it just feels like the beans really aren't ready to see aggressive selling until we see the weather forecast for August look benign without any weather threats. Sunday night we will be able to peek into early August to mid-August for at least an early look at what that forecast may look like. So don't be surprised that if there isn't really a threat in the market that we may see some similar trade to what we had last Sunday night going through the weekend here. Something to watch here for the soybeans on November. Last week's low was 962 3/4. I'm sorry, this week's low was 962 3/4. Last week's high was 992 3/4. So we've established a 30-cent range of consolidation. You probably want to keep an eye on that range, and if we close outside of that range, you're probably going to want to go in that direction. As far as the wheat, yesterday's high did match the January 2010 high for the September Chicago contract at 610. It's going to be a very key area of resistance to watch. If we can push through that, the wheat market has some more room to go here to the upside. But if a move below this week's low of 572 3/4 could probably get the selling here to pick up a little bit here. And really the only reason we're staying supported right now is continued talk of hot and dry weather in both Europe and the Black Sea region. So as we go through the beginning of harvest in those areas, we're going to want to keep an eye on any further reductions in production estimates. Moving to some of the meat markets, we did have hogs trade higher today, mainly 22 to 62 cents higher. August did finish 60 higher. We've had a string of friendly news this week, but as far as the temperatures, we are expecting a 9 to 10 degree drop in temperatures through the weekend. Cold storage report yesterday was friendly, but with the 4-day run-up in cash hogs and the temperatures looking to die down here a little bit through the weekend, we may see some pressure develop here next week. As far as the cattle goes here, we had cattle on feed and inventory reports coming out as I'm taping this report. So if you want to get the take on what the reports had to say, give our office a call. As far as cash cattle, up to 95 this week, so that's positive trade, trading at 93 to 94 last week. As far as settlements today, we did have the August fat cattle up 10 cents. August feeders up 27 today. As far as the outside markets, we did have the dollar trading higher this morning, but that is failing going into the later hours of trade. We're currently down about 20, which is about 60 off of the highs. Equities are continuing the rally for the week. We've got some more positive earnings results here today. The stress test results from the European banks really didn't cause any type of a ruckus here for the market. Looked like pretty benign. There was 9 banks that supposedly failed that stress test, but overall we are seeing this market pick up here. Actually just got some news from Rich Nelson regarding the cattle report. Placements were up 17%. We were expecting the market to be 21% higher, so that is going to be supportive to the December futures. As far as marketings, there was no change. We were expecting addition of 2% to marketing, so that will be bearish for the August contract. Going back to the equity trade here, the Dow is up roughly 125 points going into the final hour of trade, so we're continuing to have a strong move here to finish the week higher. And as far as crude oil, we did trade higher most of the day, with the market continuing to watch the possible effects of Tropical Storm Bonnie as it approaches the Gulf of Mexico. But one thing to note, when Hurricane Alex was approaching the Gulf of Mexico back in mid-June, we did rally towards $80 a barrel with that making landfall that weekend. Once the storm did make landfall, we started an $8 sell-off in crude oil after the fact. So it was a classic buy the rumor, sell the fact. Depending on what we see with equity trade next week, if that takes a little bit of a breather, we may see the same type of thing happen here in crude oil with some of that risk premium taken out. Last but not least, wanted to mention a research special that we're going to be running. This does expire on July 30th, so if you want to take advantage of it, you need to call and take advantage of it quickly. We are offering our Allendale advisory report for $125 until the end of the year, and that'll go until December 31st. So compared to the normal price, that's quite a bit of savings. So if you have any questions over anything that we've gone through in the closing commentary, or if you want to take advantage of that research special, please give us a call at 1-800-2-MARKET. That's 1-800-262-7538. And again, this is Brian Split with Allendale. Good luck trading next week. Thank you.